Hi, everybody. It's Tim Knight, Slope of Hope, and today is Wednesday, May the 5th, 2010. We've just had a second pretty nice down day in a row, which is pretty extraordinary these days. Maybe we'll go for three tomorrow, who knows. I'll start off with this graph here. This is the E-mini June 2010 future. And what I think anybody with even an elementary understanding of technical analysis is watching is something along these lines, the head and shoulders that spin complete here. In addition, they're watching this horizontal line right here, which is 1143 on the ES. Couple of ways to interpret the near term, I suppose. One way would be that the retracement to the neckline took place in the wee hours last night, right here, and we've begun the trip down. Another way, which I could also understand, would be that we have not done that, and we're going to have some kind of miniature rally up to some point. Now, I would not drop dead of a heart attack if it violated that 1180 neckline area. This was a very quick fall. I could see it getting to, I don't know, 1185, maybe even a little bit more to freak the bears out, because this is just a little too simple, a little too straightforward in a way. But that's kind of the general theme here. Now, if and when we do make our way to 1140 or so, then what? Well, I'm not really sure. I certainly, personally, am going to lighten up on shorts quite a bit, and I guess look for long-term opportunities for the short term. Although last week I had a very clear vision as to what was going to happen in the near term, I'm a little fuzzier on what comes after this. I will make this, and this is important to state, I'll make this statement, which is irrespective of what comes in the next week or two, if, and I say capital IF, if we saw the top back here on the 26th of April, and we push higher and then resume lower, and finally, after all this time, start executing a series of lower highs and lower lows, the entire tone of the market is going to change completely. The bulls have wrested away control time and time again from the bears during these many months. And if the top is in place, and if we start painting a series of lower highs, things are going to feel very different. Now, I'm sorry to bump the microphone like that. I said something along those lines probably around here too, back in late January, early February, where things were starting to sink. And as you can see, in spite of some exciting motion, that was not the case. The bulls not only took the ball back, but ran with it stronger and harder than they had almost during the entire rally. And I don't discount the possibility of that happening again. And I call this post the Spectre of February 5th because in my many, many years as a trader, I don't think any date is going to be burned into my head quite as strongly as that particular one. Because in retrospect, the ideal thing to have done for me at the time would have been to cover all my shorts, go long like crazy, and go on swimming for 3 months, or 2 months at least. And I didn't, for the reasons I just laid out, that I thought really the tide had changed. Now, it is all too easy to talk about things in retrospect, but I will say that the whole February 5 experience has certainly made me a lot more cautious. I have many shorts right now, but with the exception of SPY, they are all small, and I'm updating the stops pretty much every day. I also, as I've mentioned, and I've had mixed success with gold, GLD. Yesterday I had a dynamite day with GLD. I was jumping in and out of it with good success. Today, not so much. this is one of those days where if I had just done nothing, because I entered the day with a long position, it would have been just fine. Instead, I tried to get cute and do more of a day trade type thing, and it went poorly. I got out of my long immediately at the open. That was a loss, and basically just churned the whole day. The rest of my portfolio far more than made up for that, but that was the one sore spot in my side was gold. I ended the day long gold, and as I've mentioned, the Euro graph is what really makes me think that gold has a really marvelous chance here, because this has just been brutalized. Indeed, we've broken beneath this support line right here, so goodness knows when this is going to stop. But if we get any kind of relief rally in the euro, I've got to believe that's going to really turbocharge gold, which itself has held up wonderfully well. We've still got a not perfect, but pretty darn clean inverted head and shoulders here, and I could definitely see this moving higher. So this is my one long position, and as I'm talking here, Profit Charts is getting wonky on me, so there we go. So anyway, that's my one long position. I am keeping an eye on a variety of interesting graphs which have either bullish formations or have sunk so low that seem interesting bounce plays. There's an example right there, CSR. I haven't bought any of these yet. I kind of ran out of time today because I was so busy with some new shorts, but there are a series of mildly interesting things on the bullish side. I'm just kind of thumbing through these right now for you. But on the whole, I'm very bearishly positioned. What else is there to say? Well, I guess a couple of wrap-up things. One thing that does give me pause is the VIX. Because in the prior instances where we've had a big spike here on November 2, here on, you guessed it, February 5th, and then today, we've had these big sudden spikes. That's marked an interesting turning point. In fact, let's kind of show off a bit here and throw an SPY on top of this and zoom in on it just to kind of see the correlation. So, oops, a little too tight there. So we can see kind of an inverse relationship here. So here's November, that was a bottom. Here's February, that was a bottom. And today, God forbid, it'd be a bottom as well because I'm so short. So that does give me concern. What gives me a little bit of comfort is that if you sort of in your mind's eye picture the arc of the SPY here, there's still a lot of air between our current levels and how far this thing might fall. But the VIX does worry me a little bit. The last thing I'll say is from a news perspective, clearly this Friday's jobs report, which I imagine will be goosed mightily by all the little census takers running around, will be a market-moving event. I had said yesterday that I thought that today and tomorrow we might push higher to the neckline, and then maybe Friday will be the impetus for a tumble, and we'll see. But the long and short of it from my perspective is that the spiders have broken beneath this terribly important trend line, and there is light support here at that former breakout level, and the first really beefy support is quite substantially below that. So anyway, that's it from me. Had a dynamite day yesterday, the best ever. Had a good day today, and I'm taking great care not to completely screw all this up. So anyway, have a good night, everybody, and I'll be here on Thursday morning.